Hello, this is Brian Shannon from AlphaTrends.net. Today is Friday, the 27th of June, 2008, and the market is finally closed. At least that's probably how a lot of bullish participants are thinking this week. This week, the S&P 500 lost about 3%. 8% for the month, and we're down 12.5% year to date. Obviously, this market continues to be in a primary downtrend here on this daily time frame, and we had further confirmation of that this week with another lower high and lower low, with the most recent lower high up here at 133.70 or so, and that occurred on Tuesday or Wednesday rather, after the Federal Reserve announced their lack of change to policy, and we saw the market got back above that declining 5-day moving average, and then failed to hold it and closed. Obviously, we had a bad day yesterday, and a little bit further on the downside here today with a loss of 33 cents. Even on this 10-minute time frame, it's clear that the downtrend remains intact, lower highs and lower lows, and no reason to really be looking for a purchase as long as the 5-day moving average is declining. And here you can make a case that it's getting oversold, but oversold markets don't mean they have to bounce higher. And looking at the weekly time frame, we're getting close to the lows here that we saw earlier in the year. But on a closing basis, this is the lowest we've closed really since, I guess, let's take a look at this. We haven't closed this low since probably right over in here, which would be about June of 2006. So almost 2 full years of closes that were higher than where we are on a weekly basis, and actually on the daily basis, we continue to close at new lows as well. Let me confirm. I forgot I mentioned this price yesterday, but that was 128, and so here we are down below 128. So we've got a closing low for the year so far. No reason to think that this thing's not going to take out these lows. The Dow Jones, if you look at that, similarly on the weekly time frame, you can see that this market has really probably been the worst of the group here, as it has cut through and decisively so below the the lows earlier this year, and we've got lower lows in this market. This market was actually one of the first ones, if you remember, just a couple weeks ago, that broke down and rallied up to this prior level of support that acted as resistance, and now it's getting worse in there. Now I think that really probably leads the S&P 500 down in here as well. So there's really, again, no reason to think that we're not going to see the market probably back down towards 125 or so, and there's just no reason to be a buyer yet. The Russell 2000 had a tough week, obviously, as well. It was up 4 cents today, but obviously for the week it was down 3.9%, 6.6 for the month, and 8.1% year to date. Year to date numbers aren't as bad, but I think they have the potential to get a lot worse, as we've seen, similarly in other markets, that the prior level of support acted as resistance, and then we saw, this is about where the S&P 500 is right now. If you were to, look at the same type of movement, that we've got the S&P 500 down here, whereas this Russell 2000 is, still got some room to the downside. I think it's reasonable in here as well to look for 65, 64, and who knows, probably even lower. But again, we've got a confirmed downtrend this week in the Russell 2000. So this market is, it's got a fresher downtrend, and that's a good thing for short sellers. It represents more downside opportunity in this market than there is in the S&P 500. When we look at that 120-minute time frame, again in here, we can clearly see that head and shoulders pattern, and this level of support did act as resistance, and we saw the breakdown yesterday, continued breakdown. The again, the price objective based on measurement from the head to the neckline would indicate just below $68 a share. And again, looking at the daily time frame, and the weekly time frame, there's no reason to think that that's not going to happen. This is about the $68 level right in here. And if you remember, that was really an important level and a hard-fought battle at that 68 level earlier in the year. if we take a look at the volume weighted average price in here for the year, it only went back below it yesterday with that close below. So this market had been healthier. Now it's in danger of, I think, still a much further breakdown in here. There's no evidence of even really some stability here yet on the shorter term time frame. So if we get a rally, then I think that you're going to see 70.5 to 71 will likely be the first level of resistance for this market. That's about where we'll see that declining 5-day moving average catch up to the market as well. Obviously, the market continues to be hurt by oil. Oil was up today. It sold off late in the day, but it was up near 116. So since that breakout of the recent range of 106 to 113, it had about a 3-point rally so far. I said yesterday, if you're involved in here, that your stop probably goes down below here. I think that's still probably a reasonable place for a stop. You could say maybe even around this area, as we can take these as the higher lows, and here's some higher highs. So maybe breaking below 113, you would get out of your position in here, and that's kind of the heavily contested level. Not too heavily contested, but that's where we have seen the resistance in here. And a failure of this oil market to hold above this 113 level could lead to a pretty good failure. It gets back into this range, and then you run the risk of the possibility of a reversal back below the trend line. Now, there's nothing here that indicates that. That's more, I guess, hopeful thinking. But if this rally fails to hold, there is the possibility of a further collapse, which is why you can't just go say, well, oil's in the uptrend. You have to set your stops, listen to the messages of the market, and from failed moves come fast moves. So if this market fails to hold, there's a possibility that we could get some relief in the oil market. Just one possible scenario. The NASDAQ 100 was up, what was it? Flat today, basically unchanged at $45.65. For the week, though, it did lose 3.7%, and that makes it an 8.7% down month as well. We see here we've got the 10-day moving average below the 20-day moving average. The 20-day moving average is below the 50-day moving average, and they're all declining. I think that any rallies in this market ought to be capped up near about 46.50 if we get a bounce. That's where we see prior support. That's also where we see the declining 5-day moving average. The market has gotten stretched to the downside in here, but that doesn't mean it has to rally. Again, I'm going to end this video the same way I did yesterday, which is to say there's nothing in these markets that say buy, and the trends are lower, so they remain guilty till proven innocent. And the NASDAQ could be headed back for its lows as well, near 41.42.